Hi there, welcome to Kneppy Invests. One of the main reasons I began and continue to do this video channel is all about sharing ideas with you. And I've found over time that a lot of professionals out there have intimate knowledge of the top 50 to 100 companies on the ASX. But once you get to the mid caps and particularly the small cap companies on the ASX, their knowledge of those companies is fairly limited. In fact, it could be almost non-existent. In fact, sometimes I'll listen to professionals speak and they do get asked questions about these smaller cap companies and they'll just respond, I've never heard about that company. And sometimes I will laugh because that company is quite well known among retail investors who, a lot of retail investors are really focused on smaller cap companies. And I do think there's this large void there, this knowledge void, this lack of sharing of ideas on smaller cap companies on the ASX. And that's another reason I'm doing this channel, is to share ideas with you of smaller cap companies on the ASX. And one of the reasons I'm doing this is because I am a low conviction investor. And that means no matter how much of depth I go into researching a company, I'll never get to the point where I'm willing to go all in on that company. So I'm never willing to put all my money into this one company, which is a little bit different than high conviction investors who will find an idea, do their research on that idea or company, and then think, well, this company will succeed and I'm willing to go all in on this one idea or company. I'm not like that. And I found because I'm not like that, I'm a low conviction investor, I have more of a portfolio approach to investing. So I'm more willing to find a group of companies, say 20 to 30 companies, even more, with the knowledge that this approach, there's going to be between a 60 to 70% success rate over the longer term. And those 60 to 70% of companies that do succeed in the long term will significantly outperform the losses you might make in those 30 to 40% of companies that don't make it. So some people might refer to that as being sort of diversifying your investments. That's okay, but I just think it's because my low conviction has led me to that point. And one of the benefits, benefits of being a low conviction investor is you do a lot of research into a larger depth of companies on the ASX. So I do have a bit of knowledge, not a significant in-depth knowledge, but a lot of knowledge of a lot of companies on the ASX. And that's a little bit different than a lot of professionals who will focus on the larger end of town. My knowledge base runs from the top, from CSL, all the way to companies with a market cap of less than $10 million. And I do think because of that knowledge gap in the smaller end of town, the ability to share ideas of these companies to you, the viewer of this channel, is quite important moving forward. And hopefully, the whole point of me sharing ideas is for you to find some inspiration on one or many of these ideas and to follow up on that inspiration, do more research on these companies and discover if this company fits into your own investing strategy and into your own portfolio. So let's get stuck into it with this particular video, which I'll be sharing two ideas of two companies with you. One of these companies is probably a little bit more well-known than the other company, and that company is Aussie Broadband. And this is, in my opinion right now, a fairly exciting story on the ASX. And the other company is a much less well-known company, even though they are profitable, growing, and are operational cash flow positive. And that company is Veem. So let's get stuck into it and look at the first company, which is Aussie Broadband. Both Aussie Broadband and Veem did release trading updates in the past week from when I'm doing this video. So on the 2nd of August and the 4th of August. So that's the main reason I decided to do the video on these two companies. Aussie Broadband is probably fairly well known out there. There's probably a lot of viewers who'll be watching this video who do use Aussie Broadband for their internet connections, that sort of thing. They also provide mobile services as well. So I'll talk about that fairly briefly. Aussie Broadband listed on the ASX late 2020, if I remember correctly, and we have seen a share price take off since then. The ticker code ABB, market cap 603 million. And in the next few slides, what I'm going to do is compare Aussie Broadband to two companies 10 years ago, TPG and M2 Communications, because 10 years ago, there was a bit of a boom in this sector that lasted a few years. In fact, TPG and M2 Communications market cap went from about 100 million, 200 million to over $1 billion in a few years. And I do think this is the stage where Aussie Broadband finds themselves right now. So that's why I wanted to compare Aussie Broadband, where they are now, to where TPG and M2 Communications were 10 years ago. Revenue in the trailing 12 months, 265 million, and that's going to be growing quite considerably. And when Aussie Broadband releases their full year results on 30th of August, we're going to see a considerably higher number there. And this company is operational cash flow positive. I don't think they're profitable in the numbers yet, but more than likely over the next few years, this company will be profitable because they are experiencing some rapid growth in their business right now. And that's the whole reason they released their trading update, the fourth quarter trading update on the 2nd of August. They talked about the revenue for the fourth quarter, which is at 100 million, and that's 8% growth quarter on quarter. So that's not year on year or previous corresponding period, that's quarter on quarter growth. And that's the sort of growth you want to see quarter on quarter. I would have liked them to state the year on year growth, but they didn't really do that. They did that with their broadband connections, and they are experiencing some significant growth when it comes to not only residential, but also business and their white label and wholesale. And overall, they've seen their broadband connections grow 53% year on year and only 7% quarter on quarter, but still growing from 261 million to 400 million in 1 year is fairly significant growth. And I don't think TPG or M2 Communications were experiencing that sort of growth 10 years ago. They also have mobile, and that's it's more than doubled in the past year from 11 million to 22 million. So this company is experiencing significant growth when it comes to their business. One of the main reasons I want to compare how Aussie Broadband is doing right now to TPG in 2009 and M2 Communications is in 2011 is because between about 2009 and 2012, that's where we saw TPG and M2 Communications valuation simply take off. So I just wanted to see what these two companies were doing and how their financial performance was going through this period. So let's go back to 2009 and look to see how TPG was performing. And we'll just look at their statement of cash flows and compare to Aussie Broadband. So I did look at all financial statements during these half years. So we're looking at half year periods. For TPG, their half year finished on the 31st of January 2009. For Aussie Broadband, their half year finished on the 31st of December 2020. And the main thing I took away from TPG's statement of cash flows is they were growing, but their growth in cash receipts grew at a more significant rate than their costs or their cash paid to suppliers and employees. So you can see the cash receipts grew by 58 million compared to the previous corresponding period, but the cash paid to suppliers and employees only grew at 13 million. So their margins grew, their gross profit grew. And because their margins and gross profit grew, they went from being operational cash flow negative by 5.9 million to being operational cash flow positive by 46.7 million. The other thing that helped there was the income taxes paid actually fell from 15.7 million to 11.9 million. That absolutely helped as well. But they had become operational cash flow positive by a large amount. And with that operational cash flow positiveness, they actually were able to pay down some debts over the next few years, not only this half year, but the next few years. And the main reason, or the main thing to take away from this, is at this point in time for TPG, they were experiencing some significant growth in their margins, and that really helped their bottom line. So now let's have a look at Aussie Broadband in 2021. We are seeing significant growth in their receipts. They've grown receipts from 2019 to 2020, 90 million to 171 million. So it's almost 100% growth in the receipts. But on the flip side, payments to suppliers and employees Hasn't grown at 100%, but it's still grown quite significantly. So they haven't reached a point where their gross profit and margins are growing like what we saw with TPG in 2009. But Aussie Broadband is still operational cash flow positive by $8.8 million for this half year. So they are operational cash flow positive. And if Aussie Broadband can get to the point where they are or can grow their gross profits and their margins, they will experience some significant growth in their bottom line numbers, the cash flow, and their profits. Now to the comparison of M2 Communications in 2011 to Aussie Broadband in 2021. The main reason I wanted to use this comparison is receipts and customers was fairly similar, not exact for the two companies in this part of their life cycle. For M2 Communications in 2011, their receipts and customers 193 million. For Aussie Broadband, 171 million. The main difference here is we don't see the growth in M2 Communications. In fact, the receipts went backwards year on year, where we're seeing significant growth in Aussie Broadband. Receipts going from 90 million to 171 million. We did see a bit of growth in M2 Communications the next year. They grew their receipts from 193 to 280 million. The other major difference we do see is the gross margins and the gross profit for M2 Communications, a little bit better than what we're seeing in Aussie Broadband right now. And that goes down to the bottom line with the operating cash flow, 22 million for M2 Communications compared to 8 million or 8.8 million for Aussie Broadband. The major difference I do take away from this is there is so much more growth in Aussie Broadband right now than what M2 Communications was experiencing. If I remember correctly, M2 did buy out or acquire Dodo, and maybe another company as well, and maybe that helped with their receipts over the next 12 months or even 24 months. So I do like where Aussie Broadband is sitting right now compared to M2 Communications and even TPG. And during this period of time in their life cycle, TPG and M2 Communications were experiencing a significant increase in their valuations. And in a few years from this point in time, M2 Communications had a market cap well above $1 billion and TPG had a market cap well above $5 billion. As we look at the daily chart for Aussie Broadband, going back to when they listed on the ASX in late 2020, to be honest with you, I don't really care about the short to medium term movements in the share price, which we have seen a little bit in the past 3 or 4 months. We have seen the share price fall from $3.30 in late April, early May, to a low of about $2.45 in early June. I don't care about that short-term movements because I'm in this company for the long term. I'm in this company for the next 5 years because I do think there is potential for significant growth in this company. And the reason I think that is because of what's happened in this sector over the past 12 years. If we go back 12 years ago, there were a lot of competitors in this area, and particularly on the ASX, the year could have traded about 4 or 5 companies: iiNet, M2 Communications, TPG, and there was a few others as well. And then we saw a period of consolidation. So those amount of competitors shrank to a few, and even those few, one of those companies, Vocus, has been recently bought out. So we don't see many of these players on the ASX right now. And companies like Aussie Broadband, and they were formed in 2008, are seeing significant growth in their business. So they are taking customers away from the major players. And if they can continue on this growth trajectory over the next 5 years, and I think they can, this company will see a markup significantly higher from where it is now. And that's why I'm not really care about the short to medium term movements in the share price. However, in saying that, when Aussie Broadband did release their trading update on the 2nd of August, the market liked it. And we have seen a share price increase from about $2.80 to a current share price of $3.20. So even though we've seen the share price struggle over the past 3 or 4 months, this could be the beginning of a new, hopefully longer term uptrend in Aussie Broadband's share price. The second company I want to talk about and share with you today is Veem, ticker code VEE. Market cap 159 million. And when we look at some of the numbers for the financial year 21, we might be able to justify why the share price has increased quite a bit over the 6 to 9 months. Savine is a manufacturer of marine propulsion and stabilization systems for the global luxury motor yacht, fast ferry, commercial workboat, and defense industries. They released an announcement in regards to the financial year 21 results on August the 4th. They also had a presentation that went alongside that announcement. And if you go through that presentation, they do mention their gyro stabilizers a fair bit and the performance of their gyro stabilizers, which is up 50%. On the revenue is up 50% to 7.4 million. So it seems like gyro stabilizers is fairly important to Veem and their management. So if you wanted to do any more research on this company, I think that's where I would head towards, learning all about gyro stabilizers. Now, they did provide comparisons on their financial year 20 to financial year 21, and Veem have experienced significant growth year on year. Revenue up 34% to 59.5 million, EBITDA up 36% to 10.2 million, profit after tax up 97% to just shy of 5 million, and cash flows from operations up 14% to 6.8 million. It's one negative. If I could find any negative here, that would be the one negative I had. The cash flow from operations is only up 14%, but there could be a lot of reasons for that. And until they release their full year results, I will just be hypothesizing why cash flow from operations hasn't quite increased like some of the other metrics. The other thing I want to understand about Veem is whether this increase in their business over the past year, whether that is just a one-off, they just experienced some short-term tailwinds and the business might contract in the next year, or whether the company has reached a fairly important inflection point and this is just the beginning of a significant longer-term growth in the company. And that's a very important distinguishing thing to make, because if this is an inflection point, the valuation of the company could be quite low. But if there is just some short-term tailwinds behind the business, then the market cap could be too high. So I just want to go back in time to see how this company has performed over the past 5 to 8 years. And we have seen a very slow increase in the revenue. So this is looking at revenue and cash flow from operations. We have seen a very slow increase in the revenues, and then over the past year, it's just taken off. So we don't understand or get any clarity whether this is just short-term or whether this is an inflection point. I do think we're going to have to wait in the next year to see if they can continue this momentum moving forward. And this company has been operational cash flow positive over the past 5 years. So this is nothing new. This company has experienced this before. I think the most important thing is whether they can continue this momentum moving forward. So I will continue a little bit of research in this company to see if I can get any clarity around this little issue I do have. But if you have a little bit more clarity, I'd love to hear your opinion on Veem, your opinions on Veem, and whether they can continue this momentum over the next few years. When we look at the weekly chart for Veem, going back to when they listed on the ASX in late 2016, we notice a couple of things here. We notice the lack of interest in the market in Veem from when they listed in 2016 to the middle of 2020. So a 4-year period when the share price did nothing, not a lot of volume. The share price was trading between about 65 cents and about 35 cents. And then all of a sudden, towards the middle of 2020, we did see increasing interest in Veem. And that's when we saw the share price take off, a new uptrend develop, increase in sentiment. So it went from sort of neutral sentiment to positive sentiment. And the share price went from about 40 cents to a top of about $1.40 in under, we'll say, 9 months. And the main reason I think why the market became interested in Veem when it was not interested at all is because the lack of revenue growth over the past 5 years, and then the market realized this company was gaining traction in their business. And I still think the question whether this is just short-term traction or whether this is a longer-term thing the company will benefit from remains to be seen. So the market is suggesting this is a more long-term thing, and the company can continue this momentum moving forward. That is all I have for this video on 2 ideas these two companies on the ASX, Aussie Broadband and Veem. If you have any thoughts or opinions on these two companies, I'd love to hear it, particularly if your thoughts or opinions differ from mine, because that's how we learn as investors, to take aboard differing opinions. That's all for this video. The last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all. Have a good day. Bye.